Ladies and gentlemen, good day and welcome to Sterling and Wilson Renewable Energy Limited Q4 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sandeep Thomas Mathew, Head Investor Relations, for his opening remarks. Thank you, and over to you, sir.
Yeah, good morning, everyone, and welcome to our Q4 FY24 earnings call. Along with me today, I have Mr. Amit Jain, our Global CEO, and Mr. Bahadur Dastoor, our CFO, and SGA, our IR advisors. We will start the call with the key operational highlights for the year and quarter and outlook by Mr. Amit, followed by the financial highlights by Mr. Bahadur, post which we'll open up for Q&A. Thank you, and over to you, Amit.
Thanks, Sandeep, and a warm welcome to all the participants on this call. I would like to give a quick update on our business operations and outlook on the solar industry. Beginning with our order book, we have been able to build on the order booking momentum in FY24 and close the year at approximately INR 6,023 crores of order inflows, totaling approximately 3.3 gigawatt. New order inflows have jumped 37% in fiscal compared to a year ago, when we booked orders of INR 4,387 crores. Our domestic order inflow continues to remain a key contributor, and it has grown approximately 10% to 4,854 crore rupees compared to 4,387 crore rupees last year. We won 2 international US orders in FY24 from Spain and Italy respectively, and these mark our first international orders after a gap of nearly 3 years. These international orders are in line with our revised risk matrices, and we remain de-risked from the module price exposure in these projects. Looking at Q4 in isolation, we have received 2 orders worth 488 crore rupees, including being declared L1 for a floating solar project in Jharkhand. This is our second floating solar project we have won this year, and the scope of work includes module and EPC work. Our second project win in Q4 was from Infinity in Italy for a 20 million euro project. This project is of 45 megawatt. The scope of work includes design, engineering, supply, excluding the PV module and transformer, construction, erection, testing, and commissioning. While we had anticipated a strong Q4 for new order wins in line with our 9-month performance last quarter, a few large domestic projects have got delayed, pushing them into FY25 pipeline. So we are expecting orders from our repeat customers and some of the PSUs, which have now got pushed into April. Our unexecuted order book stands at 8,084 crore rupees, with approximately 85% constituting domestic orders. Our UOV continues to grow rapidly, and coupled with a strong balance sheet, we are expecting to be able to capture a large share of the domestic solar EPC market. In terms of the outlook, our active order pipeline, which comprises projects with high visibility of being bid out in FY25, looks pretty robust, and we look to maintain a strong win ratio in the projects that we bid. We are actively pursuing projects totaling 25 gigawatt in India and 5 gigawatts in other international geographies. The Nigeria MOU was announced in September 22, and we continue to work with various stakeholders in finalizing the EPC agreement for the project. Given the size and the complexity of the project, it has taken longer than expected, but considerable progress has been made in last few weeks, and we remain confident of finalizing the same in near future. The spillover of orders from Q4 FY24 and the bid pipeline for FY25 give us a lot of confidence that the order booking for FY25 will be higher than what we have achieved in FY24. With the expected addition of orders from RIL and Nigeria in FY25, we expect the order booking in the year to be very exciting. As stated in earlier calls, we reiterate that lumpiness in order inflow is to be expected with EPC company like ours, and timelines for achieving project closure could vary depending on a host of factors, including finalization of contractual terms, financial closures, etc. Our O&M portfolio outlook continues to improve, and we have seen our portfolio grow to 7.6 gigawatt as of March 2024. The benefits of a large portfolio is expected to bear fruit in the coming quarters. Our EPC pipeline will continue to feed a large portfolio of O&M projects over the next 12 to 18 months. Moving to the industry outlook, India continues to remain a very vibrant market, and there are multiple large solar EPC projects beginning to take off, with issues around land, transmission, etc. getting addressed by the states and central government. Gujarat and Rajasthan continue to be in the forefront in the terms of new large solar projects, and we have a strong established base which we hope to leverage on. Module prices continue to remain very low globally, and the time remains ripe for more projects to come on stream, aided by lower LCOEs, which should translate into more work for the EPC players like us. With a strong balance sheet that has been achieved this year, we remain well positioned to tap the strong industry growth in both domestic and international markets. With this, I will ask Bahadur to take you through the consolidated financial highlights. Thank you very much.
Thank you, Amit. Okay, I trust I am better audible now. Despite the challenges we faced in FY24, we are happy to finally move back into profitability, which was achieved in Q4 FY24. We closed FY24 with a top line of 3,034 crores, which was 51% higher than the previous year. Gross margins came in at 10.3%, aided by our domestic EPC business, which has been the key driver of performance in FY24. With our sustained efforts on reducing overheads, we have rationalized overheads to 333 crores this fiscal, and we were able to navigate back into positive EBITDA territory in FY24, closing the year at INR 54 crores. High interest expense in the first 9 months affected our bottom line, and we closed the year with a loss of 210.7 crores. Our Q4 results have begun to reflect the execution pace pickup of our unexecuted order book, which as of today stands at 8,084 crores and is almost 65% higher than last year. With liquidity constraints easing post the QIP and a UOV largely comprising new projects with good margin profiles, we hope to maintain our profitability and growth going forward. In terms of Q4 performance, revenue from operations for the quarter ended March was rupees 1,178 crores, aided by a pickup in domestic EPC execution, and our gross margin came in at 10.5%. Our Q4 EBITDA came in at INR 59 crore, an EBITDA margin of 5%, which is beginning to more reflect our steady state margin profile. While our PBT was 33.7 crore, our Q4 PAT was lower at 1.4 crore due to a non-cash deferred tax charge in our books of almost 32 crores due to the unabsorbed losses now being absorbed in the standalone, which had a profitability of over 120 crores. Segment-wise, domestic EPC continues to operate at approximately 10.3% gross margin, while international EPC margin was 9.8% in Q4. O&M margins during the quarter was 15%. Coming to the balance sheet, fixing our balance sheet in FY24 has been a key achievement for us. Our net debt as of March 2024 was INR 116 crore compared to nearly 2,000 crore net debt in the previous fiscal. We do not have any debt repayments till Q3 FY25, which have not been taken care of by placing fixed deposits, and liquidity situation continues to improve. With this, we can now open the floor to questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from JM Financial PMS. Please go ahead.
Hi, sir. Good morning, and thank you for the opportunity, as well as congratulations.
Sorry to interrupt, sir. May I request you to use your handset, sir? Your audio is not very clear.
Is it better now?
Yes, sir.
Hello?
You can go ahead, sir.
Yes, sir. So, sir, congratulations on the profitability in Q4. My first question is on the bid pipeline. So the bid pipeline has declined from 40 gigawatt last quarter to 30 gigawatt currently. So what has been the reason for this decline? Whether the orders has been tendered out or is it the actual reduction?
No. Actually, the bid pipeline has not reduced, but we are focusing on these are the focus market which we will be concentrating on. That has been indicated as a bid line for the company. So it is the 30 gigawatt which we anticipate will definitely be floated out without any delay in this particular year, and we'll be pitching for this. So solar market is growing internationally, and there is no question of reduction of the bid pipeline.
Sure, sir. So my second question is, so now with the things in the right place, what is your outlook on the international orders? I mean, which countries or region can see ordering in next 2 years, and how are we placed in these locations?
So right now, our increased focus is on Middle East, Africa, and European markets. These markets are growing strongly, and we are going to focus on these particularly 3 markets in coming 2 years.
Sure, sir. On the Nigeria order, I mean, what is the when I see the Nigerian currency naira has depreciated significantly since the time we have signed the MOU. Is this the reason why we are facing delays in closing the negotiations of design and EPC and finalization of orders, or is it just there are several moving parts, as you said, on the finalization?
Yeah. No, actually, that is movement in naira is not the reason, because our contract was always pegged in dollars. So it is a USD contract, and nothing has to do with the movement of naira, and it has no impact on us. So there has been some other bureaucratic changes, as I indicated in last call, also because of the NDPSC got merged with Ministry of Power, and some of the other issues which we were sorting out with them. So which all we have, I think we have finalized the contract negotiation with NDPSC. So there is no issues on that part. And in last few weeks, things have moved considerably, and we are very, very confident to finalize the Nigeria order very, very soon.
So can we expect it by Q2 itself?
So I will not like to give you a date, but we are expecting it to conclude very soon.
Sure, sir. So my last question will be, what are you guiding for in FY24 in terms of order inflow? And will you stick to the guidance of 10-11% gross margin and fixed cost of around 250-300 crores for the year? Also, now onwards, what will be the interest cost?
So I think part of the question will be answered by Bahadur, and part I will address. So I think Bahadur, you can start, and then I will pitch in.
See, as far as the interest cost is concerned, right now we are having approximately 400 crores of term debt, of which 25 has already been paid, another 50 has been earmarked by fixed deposits. On the remaining 328 crores, the interest cost would range between 30 to 35 crores on an annualized basis, unless out of free cash flows we end up repaying it. This would be more or less the range of interest for the year.
Sure, sir. And on the guidance on order inflow, gross margin, and fixed cost.
So as far as the gross margins are concerned, we'll be maintaining our historic gross margins, which we have been maintaining our international and domestic projects. And as far as the order book is concerned, we are expecting close to order book of 8,000 crores this year, in FY25, which we expect to close.
Order inflow you meant, right?
Yeah, order inflow.
Okay. Thanks a lot, sir. That's it from my side.
Thank you. The next question is from the line of Shivani from Monarch Networth Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. My first question is on the order book of FY24. What percentage is the legacy order, and what is the margin profile for those orders?
Can you be a bit louder? I missed your part of your question. Can you repeat again?
Yeah, sure. I wanted to ask that the order book that we have of close to 8,000 crores, what is the margin profile for those orders?
Our margin profile would be consistent to the margins that we have declared. And as far as your question in terms of legacy orders, I trust you mean the old orders which were
Right.
loss-making. They have all been provided for, Shivani. So over there, the total quantum would be in the region of around 70 to 80 crores in this 8,100 crores.
Sure. And my second question is on the other financial assets, other current financial assets and other current assets. What amount is the indemnity amount that comprised in such numbers?
The total indemnity receivables which are there in various places, which are in trade receivables, other financial assets and other current assets, are approximately 900 crores.
Sure. Okay, thank you. I'll be in the line for the follow-on question.
Thank you. The next question is from the line of Kunal Shah from DAM Capital. Please go ahead.
Yeah. Hi, sir. Congratulations on a good set of numbers.
So may I request you to use your handset, please? You're not very audible, sir.
Sure.
The line for Mr. Kunal Shah has dropped. Maybe move to the next participant. The next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Good morning, sir. Congratulations for the good set of numbers. Sir, just wanted to understand in terms of the order inflow you mentioned, this year we are looking at 8,000 crores. And also we mentioned about we are very excited about the order inflow from the Reliance side as well. So just wanted to understand if you can throw some light in terms of contribution from the Reliance in this year. And also this 8,000 crore also includes some contribution from the Reliance also.
No. So actually this 8,000 crores which we are guiding is excluding Reliance and Nigeria order book. So this is pure play which we are getting from other third parties by bidding in domestic and international market. So 8,000 crore doesn't include Reliance and Nigeria at all.
Okay. And if you can also give us some understanding in terms of how should we look into the order inflow from the Reliance in this year?
Pardon? Can you repeat your question again? Your voice is breaking.
If you can throw some, if you can also give some understanding in terms of the order inflow contribution we are looking from the Reliance in this year. How should we look into for the current year?
So as we have repeatedly stated on our previous investor calls that discussions with Reliance in progress and they have a huge rollout plan. But at this point of time, I would not like to guide on any numbers with respect to Reliance. We are expecting to conclude orders soon, and it is going to be a huge rollout.
Okay. And sir, in terms of the O&M revenues, this year we did a revenues of 210 crores. I mean, going ahead, how should we look into this O&M revenue trajectory, given there has been a sharp improvement in the O&M portfolio or order book?
I'm really sorry, but I'm not able to hear you out
Sorry
clearly.
to interrupt, Mr. Purswani. May I request you to use your handset, sir? You're not audible, sir. Your line keeps breaking, sir.
Is it better now?
Yes, sir. Please go ahead.
Yeah. Sir, in terms of the O&M revenues, we did a revenues of 210 crores in this year. How should we look into this trajectory going ahead?
So we are looking at close to 270 crores this year in O&M revenue.
Okay. And from the tax rate perspective, I think this year we had some deferred tax expenses, tax asset. I mean, going ahead, what would be the effective tax rate we would be looking at, or this is just a one-time exercise?
See, we had made certain provisions on unabsorbed losses a couple of years ago. Those reversed because on standalone basis, we had a profit of over 120 crores. This is a non-cash adjustment on reversal of carry-forward losses. We do not have much carry-forward losses now because we have stopped providing for it from FY23 and onwards. So this, as I mentioned, non-cash, it will be significantly lower, if at all, in the next year. The tax rate continues to be 25-odd%, and we have carry-forward losses which should absorb a bulk of whatever will be our next year's profit on standalone basis.
Okay. So put it all together, sir, what would be the effective tax rate as a whole?
The effective tax rate for the next year?
Yeah.
I am not in a position to give you an exact guidance because the calculation will depend on how much of deferred tax gets charged, and that is also on a standalone basis. But suffice to say, the actual current tax outflow will not be much due to absorption of carry-forward losses.
Okay. And sir, in terms of the finance charges, we mentioned on the debt of 300 crore, there would be an interest expense to the extent of 30 to 35%. 30 to 35.
35 crores. Yeah.
Yeah. And in terms of the BG charges and other charges, what would be the outflow we should build in?
No, BG and LC charges are already built into the project cost. Therefore, the project margins that we have guided is after that.
Okay. Thank you. Thanks a lot.
Thank you. Participants are requested to use handsets while asking a question. The next question is from the line of Kunal Shah from DAM Capital. Please go ahead, sir.
Yeah. Hi, sir. Congratulations on a good set of numbers. Hope I'm audible now. So my first question, you did mention that a couple of the projects were pushed back, which were from Q4 to, let's say, Q1 this year now. Could you sort of quantify what would be the quantum of those, and are those just domestic or international projects both?
So projects are domestic, and they're in excess of 3 gigawatt worth of projects we are talking about, which got pushed out. So that's because they are with our repeat customers as well as some PSU projects, which we are hoping to conclude in March, but we are now expecting either the end April or first half of May. We should be moving ahead with those orders.
You mentioned 3 gigawatts, right?
Yeah. That's a pretty big pipeline is there, which got pushed out, so which we hope to get concluded very soon.
Okay, and this 3 gigawatt again would be broadly what BOS end-to-end, sort of how to read it, like, or a mix of both?
Most of the orders which we are pursuing in domestic orders are like BOS.
Understood. And, if you could just give some guidance with respect to the closing order book of this 8,000 odd crores, broadly, how much would be the revenue conversion in F25 from the same?
Yeah. So I would give you the revenue guideline in 2 parts. The first part is UOV, which is 8,000 crores. So we expect to convert out of this 6,000 to 7,000 crores of revenue out of the unexecuted order book. And we expect to, like we have given guidance of 8,000 crores excluding Reliance and Nigeria, from which we'll be converting 25 to 30% into the revenue. So revenue breakup will be in 2 parts. One is the unexecuted order book, and then is the book and bill part.
Understood. This is very helpful. And also in terms of this commodity cost going up, in the recent times, so one, is there any impact on the current ongoing orders? And 2, will there be recalibration in terms of future bids, considering those?
So whenever we bid, we take current prices into account. So all our bids, when we bid out, we are based on the current prices. And as soon as we receive the orders are placed immediately. So when we book, so there is no impact. We take current prevailing market prices into account, and as soon as we receive the order, so we are totally protected from those metal or other price fluctuations in the market. and I don't think it is going to impact us at all going forward, or there will be any major recalibration of the prices.
Understood. And one last one from me. So in the last call, you had mentioned that there was some challenges in terms of the ability to tap non-fund based limits, during the early part of the year, given the balance sheet positioning, which obviously has improved now. But because of those constraints, have we caused, is there any sort of timeline delay to commission the order backlog, which was starting F24, or everything seems to be on time?
So I will start off and then Amit can join as far as the commissioning aspect is concerned. We had expected a rating upgrade to happen during the quarter. Unfortunately, that has taken longer than expected. The rating upgrade is expected shortly, which will be a significant improvement over the previous one, is what we believe. However, that has taken the entire quarter. Post which there will be discussions with banks for limit upgrades, and we are quite positive on that front. But this entire rating remaining in D for the quarter has caused constraints in terms of revenue, which could have been accomplished in Q4. As far as how it has affected the progress of projects, I'll just let Mr. Jain comment on that.
Yeah. So as far as the project revenues, we were expecting to realize more revenues in Q4, and which got impacted, but we expect that moving forward that will be sorted out.
Understood. And so just one last one, if I can just push in. We've spoken of this O&M business particularly, but over the last 4 or 5 years, whatever be the conditions, the portfolio has been between this 6.5 to 7.5 sort of gigawatts, right? I mean, the O&M portfolio. So going ahead, how do we sort of see this scaling up in that sense? And also, do we start targeting the wind O&M bit as well from here on?
Yeah. So I will answer both the parts. So as you see, our domestic order book is growing. So as far as the domestic order book is swelling, and major contribution is coming from big PSU bids, which contains the provision for 3 years of compulsory O&M part. So when our Khavda portfolio, which is 4 gigawatt, when it comes into action, it will straight away contribute huge chunk to our O&M portfolio. So you will see a significant growth in O&M portfolios, because year on year we will be delivering projects and adding it to this portfolio. So if you presume that every year, and it's a cycle of 3 years, so the portfolio will be constant at least for a period of 3 years, and every year we are getting multiple gigawatts into that. So this O&M portfolio is going to grow significantly. So you will see a rapid addition to our portfolio. So the next year, if we commission 4 gigawatt of Khavda portfolio, that will be straight away added into our portfolio. And this year we are targeting again a huge pipeline. So year on year, this will keep getting added, and portfolio is going to grow significantly. As far as wind O&M is concerned, we are working on that part, and we are considering it very, very, very seriously how to enter O&M wind segment. So that we are seriously planning to enter.
Understood. This is really helpful. Thanks a lot, and all the best.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, sir, in the previous cycle, have you seen any kind of orders increasing due to solar panel prices going down? And does the crude prices going up also have an effect on in solar panel solar projects being sped up for bidding and project execution?
Can you repeat again, Mr. Hawa? Last part of your question.
So, have you ever seen some connection between crude prices also going up and solar panels projects being sped up for bidding?
Yeah, no. So actually, the first part was you saying about the module prices going down. So definitely it's a very, very positive change, and LCOEs have come down. So whatever we are seeing, that project rollout or the project closure is getting expedited, and we see the market, but the numbers which we are putting in, they definitely are going to go up. So we are going to see far more project closure. As far as the crude prices is concerned, we said this journey, the renewable journey has started, and irrespective of